Hey guys, it's Max. How's everyone doing? We have a new ETF alert. All right. SOXY. SOXY is here. It's SOXY Sexy. I don't know. Does 12% get you excited? If so, you might like SOXY because it should get tons of bull market upside. So how I know this before I even read the prospectus is because it only pays 12%. I say only, that's not bad. 12% is pretty good. But the smaller dividend relative to some of these other ones that I'm going to compare this to, like, maybe a FEPI or something like that, pays about twice as much. And FEPI still does pretty well on the upside. So I'm going to predict this one should have that type of performance, that type of risk. That's going to be my prediction, all right? So it all depends if 12% is enough income for you or if you think this will give you some diversification. They invest in an index of semiconductor companies, all right? So 8% is kind of the new 12%. But for years, Global X did the, kind of the smart guys covered call, the 12%. And they're supposedly safe and everything. And the problem was they didn't catch much upside, but that's fine. They are pretty safe, and they're effective at paying 12% year after year. They've done a great job at that. Well, then JP Morgan came along and was paying 11, 12%, but for similar type ETFs, JEPI and JEPQ, and they're great. Now they're paying more around 8. But my point is, 8 to 12 is kind of the big Wall Street company, considered safe and sane zone. So I would say that high yield, I've defined high yield before, it's 10 or more. I'd say high yield is whatever more than Global X is. But 8 to 12 is kind of the pocket where, that you should supposedly be able to get income, because these guys are successful at it, getting income and getting just damn near a lot of the upside. Okay. So I think that's the ballpark that Jay, and YieldMax are trying to play in with this fund, SOXY. All right. So let's head to the prospectus. Okay. Prospectus. Well, first thing I wanted to say this, I'm excited about some of these other Target 12 funds that are coming out. Okay, so right now we have BIGY, which is the biggest 50. So that's, that's already out. And then we have SOXY, just came out today, SOXY, that's the semiconductor index. Anyway, we have biotech coming out, energy coming out, real estate. And then they have one called Tech and Innovation Option Income. I bet that's going to be exactly like FEPI. I'm comparing this one, semiconductors, to FEPI because, it has NVIDIA in it, but everything has NVIDIA in it. But it has some similar type stocks, and I think it has similar risk. Well, whenever this Tech 12 innovation comes out, I think it'll be pretty much basically exactly like FEPI, except it only pays about half of what FEPI pays. So it should get quite a bit more upside than FEPI, and that's saying something. So I'm excited about these. That one's called QYQI. That's going to be a burner. That's going to be a burner. That's the next one I'll probably be talking about all the time, like I talk about ULTY now. Okay, so let's see what we have going on. The fund's primary investment objective is to seek current income. Secondary investment objective is to seek capital appreciation via investments in a portfolio of companies engaged in the design, manufacture, or whatever of semiconductor. Okay, perfect. Semiconductors and semiconductor equipment related sales, whatever. The fees are a point, which is standard, 99 bips. For these guys, it's standard. It's not standard for everybody. It says the fund is an actively managed ETF that seeks defined income, i.e. a set annual target, i.e. 12%, i.e. 1% a month, and capital appreciation. The fund strategy involves constructing a portfolio of U.S.-listed semiconductor companies and generating income through an option portfolio of option strategies. All right, the equity strategy is Zega's going to look at the semiconductor companies, and based on the liquidity in the stocks and the liquidity in the options, Zega is going to construct a market cap weighted index. I read this last night. I'm summarizing it for you where I can. And they can use foreign companies. We could use ADRs. It doesn't just have to be American companies. It's going to be 15 to 30 companies. That's another reason I compare it to FEPI. But anyway, 15 to 30 companies. You could also compare this to YieldMax, kind of. YieldMax is about 30 companies. I mean, doing call spreads. The main difference on this one, that's what I'm trying to get, is that it only pays 12%. And I say only kind of in jest because that's a good thing, right? That the less is actually more when it comes to dividends, if you're a growth investor, and a lot of people that watch my channel are. It says the fund will, under normal circumstances, invest in the underlying securities directly, i.e. buy the shares. However, from time to time, the fund may use synthetics, okay? And option strategies, I'm not even going to bore you guys. It says they can do anything, pretty much. It says they're going to do covered calls, and it said they're going to do covered call spreads. But it said they might do other trades also based on what they, what's advantageous to how the market, to what they see in the market. So they kind of implied, like, and Jay said this before, if the market's way down and they think it's going to bounce back hard, they're going to definitely do call spreads and not just covered calls, because they don't want to cap their upside on a violent bounce back. But then if they think they're close to the top and they're calling for a top or a change in direction or something, or they see that coming, they might just sell a call and take the more money. So it just basically summarizes that attitude in here. It says they're going to be opportunistic and they're going to make 12%. Then it also says that they can't guarantee their strategies work, and they can't guarantee it. It also says they'll invest in some treasuries. Why invest in this fund? And it says if you want a 12% target that's not dependent on the value of the securities, but also the fund seeks to participate in some of the potential gains from the increases in share prices. And I'm going to say these guys are going to get a lot of the potential gains. That's why I keep comparing it to FEPI. I'm comparing it in a favorable way to FEPI, and FEPI is a great fund. And there's the no guarantee thing, investment risk. This is pretty much standard boilerplate. So I think we have that part covered. So let's look and actually see what the hell he's doing. All right, so I downloaded the positions and I highlighted them. Analog Devices, Inc. They have 537 shares, and they've sold a covered call. They own the shares at $223, and they wrote the 230 option for $2. It's easy peasy. They make the $2, times 5. So they put $1,000 in their pocket. They get to keep that regardless of what happens. If this stock, Analog Devices, should go up between now and Christmas, it looks like they're doing monthly options, or yeah, that's probably what they're doing. We'll see, but that one makes sense to me. If this goes up, that's all they need to do to get 12%. I'm sure that's what they're doing. All right. So if this goes up between now and Christmas, boom, then they're also going to realize 537 times $7 or $6.88 or whatever that is, or 78 cents. Plus the $2. So that's a great trade either way. It's a win-win. Jackson, what are you marking at? Jackson. All right, I was trying to see what Jackson's marking at. All right, Applied Materials, 867. Now with this one, he's written a 190 strike call, and he's bought a 200 strike call. So the call he wrote, he got $3. The one he bought, he got around $1. So he made $2 on it, just like the last one. He made $2, but this one he made $2 times 8. That's $1,600. Great job. Put that in his pocket. But then if Applied Materials should go up, he's in Applied Materials around 183, and these options, He's on the hook to sell at 190. So if Applied Materials should go up, he'll also make $7 times 867 shares, and the fund will realize that also. Just selling monthly calls and call spreads. Some of them have spreads, so they have uncapped upside, over the top strike, and some of them have just covered calls. Let's look at the NVIDIA position. This is their largest position. Let's also do this. Here's the SOXY weightings. NVIDIA's, nearly 20%. Taiwan Semi's nearly 12. Texas Instruments 4. Qualcomm's 4. Broadcom's 7. ASML's 8. Applied Materials 4. AMD 4. ARM around 4 also. Okay, so on the NVIDIA position, that's around 20%. They have 537 shares around $1.38. This is the first statement, so this is probably also the same. This might be close to their actual fill. These aren't the trades, but in any event, these are real close. These are real close, I bet. So they're in the stock at 138, but then they turned around and sold the 144 call for $2.57. And they could sell that 50 times. That's a lot of money. That's nearly $13,000. But then they spent $4,000 buying some calls behind it just so they can have a little uncapped upside. So instead of bringing in 13, they brought in 13 less 5. They brought about 8, but still that's 8. That'll go to pay the dividend. Jackson. And if NVIDIA should go up, between 138 and 144, they'll realize that gain as well. If NVIDIA keeps going to like 162, they'll also realize the gain that's between 152 and 162. They're only capped between 144 and 152. It's financial engineering or whatever. It's a trick. You could have never done this before commissions were free. People that had a seat on the exchange, so firms where they could trade for free could do this, but a retail person could never do this type of stuff. And this is awesome. This is a lot of fun. All right, so I'm looking here. Most of these, like Qualcomm, they have a spread on, which is where they sold a call and bought a call. Some of them they have on just covered calls. I would say it's about half and half. Anyway, we'll keep an eye on this. We'll keep an eye on the weightings and see how the weightings grow and shrink, and hopefully grow. We'll see how this fund does. Now, let's see. Is it trading today? I tried to, let's see. Here it is right here, SOXY. So, let's put a daily bar up here. I don't know why it's not painting the bar. Oh, there it is. Beautiful. All right. So, this is the first day. We're off. This is awesome. Looks like it opened around 50, just like they all do. Or I shouldn't say just like they all. They usually open either at 50 or 20. Lately, it's been 50. 50 is the new 20, just kind of like 8's the new 12. All right, guys. Well, I appreciate you for being here. Do your own research. This kind of retirement stuff's important. You can't go get a job once you're already, in your 60s or 70s. So there's not a lot of room for error in retirement. So run all this stuff you hear on the internet by a financial planner, somebody that knows you and your own situation, et cetera, et cetera. All right, guys. I appreciate y'all. Have a good day.